Hi everyone, I'm Karan and welcome to Karan's Gyan. So one of my viewers, Sanket, he asked me to post a video about Aditya Birla Fashion and Retail Limited, more particularly about its upcoming rights issue. So this is a video for you, and I hope you like this video. Moreover, I would ask my viewers if they want any video to be posted about any company's fundamentals or any analysis that they require, or any corporate action that is coming through. You can hit me up, you can comment, and I can come back with that video as soon as possible, just for my viewers exclusively, because I have just started my channel and I want to grow it. So, anyways, I'll get back to this topic. I don't want to bore Sanket anymore. So, as you know, Aditya Birla Fashion and Retail Investment has come up with a 995 crore rights issue. So, before delving into the topic and the corporate action, I would tell you what a rights issue is. So, rights issue is one way for a company or for promoters to raise capital to pay down its debt, to deleverage itself. And basically, a company need not be cash strapped. Good companies also that have healthy balance sheets, even they raise rights issue. This is particularly so that they expand their operation. So basically, what happens is they float uh, a number of shares, and they give their shareholders an opportunity to increase their exposure to the stock at a discount price. So giving you an example, in this company, uh, the current market price for Aditya Birla Finance is Aditya Birla Fashion is 125 rupees. They are giving an opportunity to buy the share at 110 rupees. However, shareholders who has 77 shares or shares in multiples of 77, they can buy 9 shares. For example, if I have 77 shares, I am entitled to buy subscribe 9 shares. If I have about 154 shares, I am entitled to subscribe for 18 shares. It's only in multiple of 77. But if I have 100 share, I can only apply for first 77, which is 9 shares. So this is pretty much it about the rights issue. Going into ABFRL, as I said, ABFRL has a 995 crore rights issue. This would be used to deleverage its debt of 2,500 crore. A good time to deleverage your debt when the market is in a downturn, and this is the best time to raise money because a lot of companies need money, and you and the promoters are not able to foresee the future. In fact, no one is able to foresee the future. It is good to have money in your hand that can be used to clear off debt or maybe expand operations if the future looks better than what it is looking right now. Anyways, so the record date was 30th June. What I mean by record date is only those shareholders would be considered for subscription of rights, of the rights issue, who have shares before 30th June 2020. So there's no point buying shares right now. Today is the 3rd of July, and you can't buy shares today because the record date has already gone. Even if you have 77 shares that you bought today, you're not eligible for the subscription of rights issue. However, it can't be end of the day for you. I would explain you the process of selling your rights entitlement. So there's a payment structure to paying for subscription. You don't pay all the money at once. All right, you basically get shares in partially paid up. So partially paid up means it is not completely paid up. So generally, ABFRL has a face value of 10. All right. So you'll when you apply for it, you'll get shares that have a face value of 5 rupees, and you're basically paying 55 rupees for the share. You'll be paying it in three tranches, three installments. 55 rupees on application. You'll generally write a letter to the companies, giving your folio number, giving your demat details, and attaching a check along with it, with the required amount of 55 rupees per share. So if you're subscribing for 9 shares, you would put a check for 55 into 9, which is about 505 rupees. You'll put a check of 505 rupees, and by January 2021 you'll have to pay another 27.5 rupees per share you're subscribed, and by July 2021 you have to pay the rest amount. So when you have paid everything, your partially paid up shares would become fully paid up shares. Just for a fact there are dividends on partially paid up shares also, and there are dividends on fully paid up shares also. Partially paid up shares have lesser dividend. So if ABFRL has a dividend that has declared, they'll declare dividend for fully paid up shares and partially paid up shares. So if you are holding partially paid up shares, then you are entitled to a dividend also. Another advantage of this is, you can basically put your money in fixed deposit and break it whenever required, because if you have the money, you basically are getting interest of the money, right? So you're paid 55 rupees right now, you can get interest of this 27.5 rupees for 6 months, and the last tranche of 27.5 rupees for 1 year. 7% fixed deposit rate is going on. I'll show you how much advantage you'll have by calculating it in front of you in future, I mean in the coming video. So there's another way. Either you pay for the rights issue, or you can basically sell your rights. So it's called, you can basically sell your entitlements to those people who want it. And if you don't have the 77 shares by record date, you can basically buy a right entitlement from someone who's selling it. So basically, this is the ISIN number for the rights entitlement. It is not open right now. It will open on 8th July when the rights issue period would start. So you can basically go type this up in your trading terminal, and you'll get the current trading price of the rights issue. So ISIN stands for International Securities Identification Number. All right, International Securities Identification Number. Yeah. So you just need to put this in your terminal, and you can get to know the price of the rights entitlement that is trading. So that if you have rights entitlement, you can sell them, or if you want rights entitlement, you can buy them. So rights entitlement is generally the difference between current market price and the issue price. So your issue price is 110, current market price, it's around 122, 120. I don't know, I've taken it as an even 125. So it is about 15 rupees per share. So for 9 shares it will be rupees 135. Now there is another catch here. You have to buy an issue size for entire 9. You can't buy right entitlement for 4 shares. There are no partial right entitlements. This term is actually called partial right entitlement. Some companies that are really big and whose right size, the subscription price is really high, they give partial right entitlement. Whereas this doesn't have any partial rights entitlement, so you'll have to buy rights entitlement for 9 shares only. You can't buy for 1 share, 2 share, 5 share, or even 8 shares. So you'll have to pay 135 rupees. This price can change based on the current market price of Aditya Birla Fashion Retail Limited. Okay, now you can sell your entitlement, basically right entitlement. I've given you the ISIN number. So what is the advantage if you want to buy the rights? So if you want to subscribe for the rights, you have an advantage of discounted future value. So I've given an example here. So in July 2020, you're paying 55 rupees upfront. All right. So basically, its present value would be, like one par. Whereas you're getting 7% fixed deposit. So what if you have that money in fixed deposit? I know 27.5 rupees is less, but there are very big businessmen who are dealing with 1,000 shares, 10,000 shares, 1 lakh shares. Okay, the right entitlement sizes, the issue size is about, you can see how big the number is, about 9 crore. So basically this is a lot of money, and people who are subscribing for huge amounts, for them this is lost interest. So money lost is, like money saved is money earned, basically. So money earned from interest is actually what goes into your pocket. So for example, if the current value of 27.5 rupees that you will pay in the future is 26.58 rupees. So how do I explain it better for people who don't have commerce background? So if you have 26.58 rupees today, and you put it in your bank account or a fixed deposit that gives you 7% interest, by January 2021 it will be 27.5 rupees. All right. Whereas if you put 25.67 rupees at 7% fixed deposit for 1 year till July 2020 to July 2021, you'll generate 27.5 rupees. So basically, the 110 rupees that you'll pay in three tranches right now, I mean over the period of 1 year, it is actually worth 107.25 rupees right now. So you're saving about 2.75 rupees per share in interest earned, which is about 24.75 rupees for every 9 shares, for the rights entitlement. So this is pretty much my take on Aditya Birla Aditya Birla Fashion and Retail Limited. Um, Now I was asked what are the pros and cons of holding, selling, or buying, rights entitlement. I told you what is the, if you don't want exposure in ABFRL, you can sell your rights entitlement. So you basically, when new shares come up because of rights entitlement, there's a dilution of price. So you'll be losing the price in share because new shares have come up and there is more supply than demand. So you'll lose certain cash, you'll lose certain value of the shares you're holding. So if you're this, you should either sell your rights entitlement, or maybe maybe subscribe them. You should not hold the RE. All right, there's no point holding the RV. There's no point holding the RE till it expires. By RE I mean rights entitlement. So either subscribe it or either sell it. End of story. Yeah, and it depends on what your investment criteria is. I'm not commenting upon the financial structure of ABFRL. All right, it is up to you what you think about it. If you want more exposure in this company, sure, go ahead. If you don't want any exposure in this company, sell your rights, and that's pretty much it. And I hope you liked it. And this is what I could do to the best of my ability. All right, Sanket. Thank you very much.